Hello, everyone. Welcome back to the MHP Show podcast. I'm your host, Derek Vickers, on the MHP Show. Look, we're talking mobile home parks and all the aspects of that business, operations, acquisitions, anything about that. And a lot of our guests have a lot of experience in this area. And I got another great guest with me today. But before we get started, look, we're getting to the end of the year right now. And look, we've closed 6 deals in Fund 1 right now. And we have 6 more under contract. So look, if you're looking for bonus depreciation by the end of the year, and you're looking to deploy some capital with mobile home parks, go to victorycapital.com. It's VICKTORY capital.com. And you can check out the info on Fund 1. We're buying parks in the Sun Belt. We have 2 in Arizona right now and 4 in Florida in the fund. So if you want to check that out, go to victorycapital.com and you can schedule a call with me or somebody on the team, or you can go to invest, or you can email invest@victorycapital.com. All right, so let's get into it. I got Matthias here. He's with WKRG Investments. Welcome to the show, man.
Thanks, Derek. Thanks for having me. I appreciate
that. Absolutely. And so it's Matthias Grunwald.
Nailed it.
Yeah, but how are you supposed to say it? You told me how you're supposed to say it. You got to say it.
It's last name is Grünwald. So Grün is actually green in German, and Wald means kind of like forest or woods. So it's kind of like the German version of Greenwood, the last name.
Got it. So how does a German get into mobile home park investing?
Dude, I don't know. It's a long story for sure. We get into it. Man, I mean, I'm a father and husband of one. Moved here from Germany about 13 years ago, back in 2012, from a W-2 back then, right? So was a plant manager at the time, got promoted as a chief operating officer at that global company, and I was a manufacturing company. So operation was always in my blood, and kind of worked my way up in that company. And at some point, it was like 2020, COVID-19 hit. And the world slowed down. You kind of ask yourself the same self-reflection questions, and then it's kind of like, okay, I'm doing pretty well, but is that it? I'm in my early 30s, and I feel like I make my boss richer than I do myself. Increase my balance sheet, and so what else is out there? And I just literally just Googled it. What do the wealthy do? What do the rich do? And it's always spiraled back to real estate. It doesn't matter what they do. Even like business owners, they always somebody has a real estate portfolio. So I started researching it very heavily in 2020, and then in 2021 we decided to jump in and start buying like small multifamily properties. Start with a duplex, and then held that for like about 2 years, and just trying to learn the processes and learn the game in general. Did a fourplex right after in 2023, and then I said, you know what, I want to go double again, like do at least an 8 unit. So I did like a 26 unit apartment complex of a JV, and then got into like an RV park, a 27 unit in the same year in 2023. And my partner, Tim Woodbridge, is on that deal. And that's how we started working together on that JV. And he pulled me to the dark side of mobile home parks. He told me all about it. And I'm like, dude, this is amazing. I love this asset class and what I'm hearing. And then in late 2023, we started working together a little more. And then early 24, we did our first syndication and took our first 100 unit down together. And since then, we did numerous syndications, and we scaled to over 1,000 units right now together in a matter of like less than 2 years. So about 2 years now at the time of this recording. That's how I got into mobile home parks. But yeah, it's a very good question. Like, it is a lot. It's like, are you a German? How'd you get into trailer parks, man? That's a wild story. Tell me more about it.
Yeah. Yeah, it's like you probably tell people that, where you're from. Like, this is what I do. They're like, what is that? Like,
yeah,
what is that?
Yeah.
No, that's interesting, man. So you and Tim were doing like JV deals before you guys got together?
Yeah, we had like one JV deal we did with an RV park. We in one of the masterminds, and we kind of got together, through some various calls and stuff. And one guy found like an off-market deal, small RV park out in Mississippi in Hattiesburg. Another huge city. It does pretty well. It's just small. I wouldn't do it again, but at the time it was the right move, and I'm grateful for it. I still say jokingly today, Also, seriously, it's the best deal I ever made because I met my partner Tim, and then we now working together and we building this empire. So it doesn't have to be always a home run when you do the first deal. Even though it wasn't my first deal, but it was my first deal in the RV park MHP world, so to speak. And that was the gateway for me into the mobile home park world. So that was very powerful. And then from there, we just did syndications right after because the deals got so big that the first one we did together was a 100 unit and $3.85 million deal, and we had to syndicate it. We had to raise capital from investors and retail investors. That is.
Yeah, yeah. Why do you say that? I think it's something I want to, I think it's important to unpack on, because a lot of people think that you have to just crush it on the first deal. And I was fortunate enough, I had one of those deals, I crushed it, but I agree with you. I don't think you have to. Like, why do you think you don't have to?
It's like with anything in life. I mean, if you start running, if you start like working out, lifting weights, whatever you're doing, playing chess, playing guitar, whatever it is, you're gonna suck at it. And the first one is just gonna get you in the game. And from there, you learn the rules, you learn the ropes, you know what you're doing wrong. I mean, my first duplex, I completely forgot that they're gonna reassess the property taxes, and it doubled on me, and then almost my cash was vaporized. But I had to do that first deal to understand that this actually happens, and it's cash flowing today. I still have it, but getting in the game is better than just reading books because you just mentally rehearsing something that you may be doing one day, and there's a difference between actually going out there and do it. And then the first one is you can do all the mistakes. You probably do a smaller deal at that point, and it gets you ready for the big one. You're not going to jump in the Super Bowl if you never played a game before. It's that simple. You have to go through the reps. You have to get to the NFL first. You have to join a team that can that's playoff worthy and that's Super Bowl worthy, and then you have to play with the team to get there. That's the same in business, same in real estate, man.
Yeah, dude, I agree with you, man. I think it's important to get in there and get those reps, because I see people that have, been hanging around these mobile home park face groups for longer than I have, and they've got more to say about mobile home parks than I do, and they don't even have a deal. Like, and
Yeah,
I'm just like, do you have to get out there and do something at some point? Like I learned about this business and then got into a deal like got 6 months later, like maybe it's 5 or 6 months later. Um, and I would say it sounds like you're like that too. Like I've always been kind of, we'll just figure it out. Like let's just roll and let's figure it out, because you're going to be figuring this out. Right. Right. You agree with that?
totally.
Like even as you scale, like as you, okay, we're going to do $10 million deals. We're going to do a 20 or $30 million deal. Now there's a different level of figuring it out as you go.
Totally. Yeah. Same when we started syndication, right? We didn't even know, okay, we knew the 506B and 506C and all that stuff, the B and C's, but okay, how do we raise capital? How do we even do this? Who knows that stuff that wants to partner with us so you can show us the ropes, and then the next one we can do alone, And just like having to raise like $1.3 million for that first deal was daunting. And we made it, looking back, I mean, that was a mammoth task and we just had to figure it out. A lot of people give up right there because that I never did this before, but I should even try. And we just did it, and now we are going after deals where we have to raise $3 or $4 or $5 million, and the $10 million raise will be daunting in the future. And hopefully one day that will be okay. That's a mountain we climb, but now we're doing even larger deals. As you're growing, you flex that muscle, you break that muscle down, it's gonna regrow stronger. Is how it is. It's the same in
Yeah.
business, same in fitness.
Yeah, it's true, man. So tell me about the first capital raise. Was it a pain in the ass?
It kind of was
Yeah.
a lot of calls with people. We did a lot of mistakes on that one too. Like we partnered with somebody, he did a really good job on it, but we also put way too much detail in the pitch deck. Like we put the full underwriting in it, basically like the pro forma and everything. And people like investors didn't read it correctly and just misinterpreted stuff. And we realized, okay, maybe too much information is not good. Rather have it like, okay, here are the returns, and then if you have questions, email them to us, and we can basically answer them that way. But it was pain. It was a pain in the ass for sure. And we made it. I mean, to the 11th hour. I think we had like a couple of days to spare. We had enough to actually close it. And I think we raised like 3 to 4 weeks after closing to get all the capex money in. So it was kind of tight, but that's how it is, man. And Got City as well.
Yeah.
It was all unicorn and rainbow. It's just how it is. And it was our first deal, and investors knew that too. Like our partner had a lot of deals, but he didn't do much mobile home parks. So it was kind of like, okay, multifamily guy, meets mobile home park people, and it's my first mobile home park. on top of it, there was a lot of newness there, and I can totally see why people said hell no,
Yeah.
because this is too young of a group. But people that understood and could read between the lines, that we were like hungry, and Tim had a lot of experience in mobile home parks. He was in the game since 2019. So yeah, they were investing in us, and there was people like friends that invested with us alongside. My friends, and also my CPA invested in it. Like he's not necessarily a friend, but he since then repeated 3 times in our syndications already because he's getting the returns now. He's like, oh crap, this works.
Yeah.
So
Yeah.
he's gonna every time we send him a pitch deck, he's gonna invest money with us. It's pretty cool. So it's becoming easier. It's just a massive flywheel that has to start turning and getting that thing to move the first time, man. It's just what takes so long, and it takes a lot of strength.
Yeah, yeah, and I'm laughing because like I totally like I've been there before, dude. I know exactly the first one is a pain. You're getting um you raise the money and then you got to raise the capex money. Like you get enough to close the deal and then sometimes you got to raise the capex money. I mean, it's just I think what a lot of new people don't understand is that in that little part there, right? You're raising the money, then you got to raise the capex money. Like your due diligence money or your escrow is hard at that point. You spent I don't know how much money on due diligence. We use third party due diligence now, so that means we've spent 25 grand on a park. Like so people don't understand that like that shit comes out of your pocket, dude, and you've got to like, hey, we're making this deal work, like hell or high water. And a lot of this is figuring it out, just like we said before, because like, you got to convince the broker that you can close. The lender, you gotta make sure everything's tight with the lender, and like it's just a dance, right? And you just kind of get better at the dance and more confident at the dance. But the capital raising thing is definitely like, just like Matthias said, it's a flywheel you got to get going.
Correct. And also, I feel like if the timing matters too, when you do it, what time of the year, like right now, the time of this recording, end of the year 2025, it helps that, some wealthy individuals that need tax benefits, and like you mentioned earlier in the show, when you open it up, like right now it's a little bit easier, at least what we are feeling, to raise capital. But like when we had to raise capital around the election, that was not good timing for capital
No,
raise because people were like,
no.
oh man, I want to hold this out. I want to see who gets elected because they were all scared of their money and what the market's going to do. So that was that was terrible. We actually had to put GP money in just to plug holes to close the deal. Because in that time frame, we had such a hard time closing, like raising capital. That wasn't even a smaller deal. Like there was one deal we had to raise like less than $500,000, and we couldn't even raise that in a timely fashion. It was a great deal. And now, like the floodgates open, we filled those holes. We had just one deal we did to be closing on next week, $1.5 million raise. We raised all that money, oversubscribed in 7 days. Totally
Yeah.
different story.
Yeah.
Half a year later, it's wild. We did, of course, we changed the process a little bit too, and like we try to go back and okay, that made us stronger. What can we do better? Of course, we did all of that, but also you can see like the sentiment is much better. So the investor sentiment you cannot control. People are watching the news, they're going on social media and they see all the horror stories out there, and then people are getting really, cold brown, and then they're like, oh no, not investing right now because real estate's gonna crash. Like it's one market, like it's one index fund,
Yeah.
it's gonna crash tomorrow
Yeah.
morning.
Yeah, yeah. That's a great point because you are battling that. Like you are battling that. Like whatever's happening in the macro economy, and like, the Fed could come out, or a large, like Nvidia's earnings came out yesterday. And like if that would have been terrible, like that could have swayed your guy that's going to write a $500,000 check today. You know what I mean? So like this data that comes out constantly can affect the sentiment of investors. And it's like it's I don't know. I think like this year to me, it's been like, look, we've raised more capital. So this is like we've raised more capital than I think we ever have in this last 3 months. But it hadn't been easy. Like we talked to a lot of people, and I think some other people I've talked to have said that this year's been pretty much a bear for them raising capital. I don't know how much if it's been like that for you guys.
The same. Early this year was pretty rough, especially like around the election up to like summertime this year was a very tough stretch, and then it became easier towards the end. Now it's definitely a lot easier, but not easier than it was before. We definitely have to do a lot of conversations. Now we try to be active on social media too, and it's interesting. Like everybody says in the beginning, like when we talk to marketing agencies and they say how you supposed to do like your social media and stuff like that for this industry, and you don't really go for like the million views or anything. You just try to find like you're nurturing your network, right? And those people reach out to you. I had one person reach out to me on LinkedIn. He just says, "I need depreciation now. Call me. Here's the number." I mean, it's on LinkedIn. That's how it goes.
Yeah,
Just
yeah,
they
yeah.
don't see on the post or anything, but it's on the sidelines. They're messaging you, and that didn't really happen about a year ago at all because it was right after the election. So yeah, we definitely seen definitely a hockey stick upswing to the positive on the investor sentiment on our end, and we have some big check writers now too. They are chipping in money into some of our deals, which is amazing. So again, became easier, but not easy. We not one of those operators that have been out there for like 10, 15, 20 years yet either. So I hope it will become even easier as we flex that muscle more in the future. But we're pretty happy with the results so far. I mean, I'm really proud of the team that we just pushed through the hard times. I think many would have given up when it was so tough. Capital raising doesn't work for me. Let's do smaller deals and just take it down on JVs again, and backpedal. We didn't do that. We just said, okay, let's go back to the drawing board. How can we be more of an attractive operator? And Tim and I, had several like meetings and like we met personally several times and hours over hours. We talked about vision building and how we can make this attractive, how make this a deal to investor that would be stupid to say no to. Make this an offer that's so compelling that I won't say no to it. And this seems to work now in combination with the sentiment going up. So we're pretty happy with the results by the end of the year now.
That's great. That's great. So what did you guys come like? What were the things that you're like, hey, we're gonna change this and say like make this deal more attractive? Like what did you do?
The last one we did, which was very well received, is we do monthly distributions now after the first 3 months. So before we did 6 months after stabilization, so after closing basically, did quarterly distribution. Now we pull that in and say, okay, after 3 months you get paid and you get paid monthly.
Mm,
More work for us, but then just have that we just stand out that way to our investors. Some
mm,
people just want to get cash flow as fast as possible and be hitting full pref in year one right away. So whatever the pref is, between 7 and 9% depending on the deal. Right now we like mostly 8 on our deals right now. They're getting full pref right after 3 months monthly, so they get monthly cash flow. It's not really different, really, compared to a quarterly, but it's just it's nice to see that money coming in every month. I think to an investor, and
correct.
we thought
Correct.
so it helps a lot. So a lot of people do quarterly. We pushed it into monthly, which we've seen some really good feedback on that.
Awesome. Awesome. Yeah, look, I think that we've been looking at doing that at going to monthly and we just haven't done it yet. But you're right. Like it's the same. it's it's the same. It's no different, right? And I think that's a big value add for people because if these bigger guys can do it, I mean, there's no reason that, we can't do it.
Exactly.
Um, so I see guitars behind you. Like you mentioned chess. So are you a chess guy?
Not at all. I threw chess in there just to like connect with
Uh,
the audience,
yeah,
but
okay, got it, got it,
not
got
really
it.
on a personal level. I think I played chess once in my life and I totally suck at it. So don't worry about chess on this
Yeah.
conversation.
Yeah. Well, I know you're a workout guy or a running guy. So tell me about that. Like, how did that start?
Oh yeah, good question. So I have one of my best friends. He's been running since high school, and about 2.5 years ago or so, he lives in Ohio, and back then I still lived in Greenville, South Carolina. And he visited me at my house, and he stayed for a couple nights. And then the first night, like we just had like a cookout, and he's been a very good friend. And he said, "Let me go for a run real quick." I was like, "You running?" I didn't even know. He was like, "Yeah, I was. He had an illness for a while, but he got behind that and was on the mend, so he started running again." So all the time I knew him, he was fighting an illness, which I knew about, but I didn't know about the running. And he said, "Yeah, I was always running since I was going to high school, and running every day now is my goal for the year. Like one every day, at least a mile or more every day." So when he was there, I ran with him, and he kicked my ass. And I'm very competitive. I was like, "Okay, I'm going to beat you one day in a half marathon." So now I'm training. I'm training a lot just meet that goal basically. But he's very quick. I mean, he runs a half marathon like in 1 hour 45 or less. So he's pretty good at it as well. And I'm training right now for my first full marathon, which I have in December next month. So in Palm Beach actually. So I just
Nice.
did a half marathon last weekend in St. Pete. I did half marathons so far, just like events, but I do a lot of training runs and stuff like that. So get a lot of mileage under my belt, doing weekend long runs and then a couple of, threshold runs in the week or just like recovery runs throughout the week. And usually Saturday mornings is my long run where I go out for like 2-3+ hours for a long run. So yeah, now living in Tampa, Florida right now, the weather's perfect for running at the moment,
Yeah,
especially in the
that's
morning.
great.
It's like, yeah, it's
Yeah.
perfect right now. It's beautiful.
So you just go and run for 3 hours on
Yes,
Saturday.
like Forrest Gump. And I'm like, I'm tired. I go back home.
Yeah, yeah. Like, dude, Saturday I'll do long runs, but I only do like a 10K.
I got you.
I just like I could do more, but like my sweet spot is like a mile to 5K. Like I'm really strong in that.
Okay, cool. Yeah,
Um,
everybody has a different distance they're going for. I'm just having those 3 hour plus runs because I'm training for a full marathon, which probably will be for me like over a 4 hour run. So I'm actually peaking at my training right now with the mileage. And I'll hit an 18 miler tomorrow, actually on Saturday, and then I'm gonna have a 20 mile next week, and then I taper off and then be ready for the full marathon, which is 26.2 miles. But yeah, I mean, I'm running just sometimes half marathons as a training run. And don't get me wrong, I'm still very exhausted after those, for sure. But yeah, I do shorter runs as well, like a quick 2 or 3 miler, like a 5K as well. And I like to run those in events too, because they're just like more for, speed and they're quick. I like
yeah,
those. Pretty
yeah,
fun event, very electric. So it's pretty cool.
yeah. That's I'm pretty fast, like in that area. I need to train up and get into the marathon game. I'm sure I could go and run one now. I mean, I'm like in good shape, but what do you listen to when you're running for 15 miles, 20 miles?
Oh man, that's a good question. I experiment in the beginning. So my running friend said he always listens to like audiobooks and stuff. And when I did that, it didn't really work for me just because my mind is always drifting off of listening to my body and stuff. And then what I found what works for me is just like playlists, depending on what kind of run I do. I created my own playlist on my phone.
Mhm.
For like long runs, I try to have something that's not too fast. And you mentioned the guitars, my background. So I love AC/DC, Metallica, and all that stuff. I definitely do not listen to Metallica on a half marathon because I'm gonna be completely gassed by 6 miles because I'm gonna go run way too fast. I'm gonna be pumped up. I might listen to the last 6 miles or the last 5 miles to get my ass in gear and just keep moving forward and get this F year moment.
Yeah.
But yeah, different music for different paces for different distances. So like 5K, dude, I definitely have like a Metallica playlist that's all Metallica, like all the Creeping Death, Master of Puppets, all that stuff. It's in that 5K. Like when I ran it like for, and my best run was like 24 minutes. I probably can get it in 23 nowadays, 22 maybe, high 22 minutes. So that's like this 25-minute playlist I
Yeah,
have.
you get a few
Uh,
songs and yeah, you
yeah,
get a few
yeah,
songs and then you're done.
exactly.
Yeah. Yeah. Um, yeah, no, that's interesting, man. I usually do like some Afro house or some deep house that just kind of gets me like if I'm doing a longer run because I just kind of zone out to it.
Yeah,
And I like gangster rap too. So sometimes if I'm running a 5K, I get some shit to get me pumped up, just like just
that's
like
good.
doing your Metallica stuff.
Yeah.
So yeah,
Exactly. I like the
anyways.
deep house stuff too. I actually listen to deep house as well in some of the runs, some of the longer runs, for sure. Because sometimes when you have that beat, you have to make sure that if it's a faster paced song, you don't you start to naturally match the beat, and then you look on your watch and like, oh crap, my heart rate is like 165 right now. I'm going way too fast.
Yeah.
Yeah,
Yeah.
be careful.
Yeah.
Yeah.
I do a lot of I don't know if you've ever heard of Orange Theory Fitness, but like it's like heart rate training, like running. I'm running, anywhere from 3.2 to 3.7 miles in there every day, but it's at
Okay.
intervals, right? You're only
Gotcha.
like on the treadmill for like 25 minutes, 28 minutes, but it's at intervals. I'm sprinting. I might walk and I'll jog, go a little faster, but it's cool, man. You would like it. You would like that.
I I never heard that term before, but the watch that I'm using does that with me, where it says you're gonna for example, let's do 10 minutes warm up at this like 9:30 pace, and then it says okay, now you do 40-second sprints at like a 5.5 pace or something. So it does tell me that and gives me like a countdown. So it's very similar. It's supposed to get
Mm.
your heart rate up to like 170 something, and then you recover while you're walking again. So I like those. It's really good training for
Yeah,
sure.
yeah, for sure, for sure. Um, Yeah, shifting back to like, parks here, get off to training, whatever. Um, so what do you think about this market? Like, are you scared? Do you think something's gonna happen, like where the market goes crazy, or are you pretty optimistic?
Ah, man, that's a good question. I'm always optimistic. Even if the market goes crazy, I think there's going to be problems. There's going to be opportunities to solve them, if that makes sense. Of course, we probably see in the MHP world, I feel like we're probably the most recession-resistant asset class out there. Somebody will always downgrade to a mobile home park, for sure. And if you have a lot of tenant-owned homes, people, if they get tired of their money, that they're definitely not going to be in a position where they can afford to move their home for $20,000 somewhere else. So they're gonna rather keep paying their lot rent. So from a tenant based perspective, I think we are definitely well set with our asset class with MHP. In general, I don't know. It's over my pay grade, so to speak. There's always some craziness going on. I feel like I think if somebody says they know what's going to happen next, they're probably full of crap because I think nobody knows. So I know there's a lot of politics going on. Definitely watching it and trying to be nimble, of course. And I think that's the best you can do is just to be very flexible and nimble and react to it, and don't buy deals that are too lean in case things go a little bit south. I think that's very important. We always stress test our deals with higher vacancy, more bad debt, etc. So we want to make sure we can float the deal and still make returns and make debt service obviously. Over that business plan 5 7 10 years, because when we, especially larger deals we're doing right now, they're all like 7 to 10 year deals at the moment.
Mm,
Nobody knows what's going to happen 6 7 years from now. Nobody
right,
knows.
right.
Nobody expect that rates going to double within like almost a year back in 2022, I think is
No,
what it was. So
no.
nobody knows.
Yeah, yeah. I think I'm cautiously optimistic. I'm an
Yeah,
optimistic guy, but on like some of this stuff on deals, you kind of have to add in a little pessimism where it's like, hey, what if this happens? What if this happens?
yeah,
And I've just been looking at more like risk mitigation a little bit and just trying to see if shit did hit the fan, like, you know, how would we fare? What can we do? Like, what can we do proactively? Because, like, I mean, the world's pretty crazy out there,
oh yeah,
and there could be some wild event that triggers something crazy. you know, like,
yeah,
like so. I just, I want to be ready for that. I mean, I just have a feeling that there's some weird stuff going on in the market. And look, I could be wrong, and I hope I'm wrong. If everything just starts blowing up again and everything's going great, sure, that'd be awesome.
right,
But we'll see. We'll see what happens. But I agree with you, as I think this asset class, it can be pretty immune to stuff like that because of just the nature of it. And now people stop paying rents, like, that's that could be a problem for everybody.
totally, totally.
Yeah. So what's next for you guys? Like, where are you guys going? Like, what's next 5 10 years? Where are you guys going to be?
Yeah, we want to get to right now. We at about 45 million of assets under management right now. We want to get this, to 250 by the end of 2029.
Mm,
So a quarter billion, and then the next goal after this to have a billion under management.
mm,
The next by 2035. So you want to house as many people as possible in affordable housing. So I want to house over 10,000 people. Give them affordable housing and be building like this. We call it the emotional ROI as well to our investors, and say if you put $100,000 down that houses so many people, and some people love that actually, giving that to
mm,
our investors and say, yeah, your money actually houses this many families or this many people, and it gives them affordable, safe housing.
mm,
So that's something we're working on. We keep working on the brand, on WCG Investments. That's what we constantly are working on at the moment. And then, just crushing the returns for investors, obviously, and building wealth for the entire team, at the same time, which I think is beautiful. It's a win-win-win situation. We're taking a lot of distressed properties down and, making them a better place to live. We just sometimes question humanity of what disrepair there have been in and how people have been treated, and us coming in with fresh capital and cleaning things up and improving infrastructures or just like rebuilding infrastructure, so to speak. It's good to see people appreciating the upgrades that we do and the improvements to properties, and we want to apply the same concept over and over again. It's very repeatable, especially when you are raising capital. Kind of sky's the limit as long you serve the investors well, if that makes sense.
Yeah, yeah, totally, totally. What do you guys look for in deals? Like, what is your value add play? Are you guys looking for
Yeah,
what are
we
you
do
looking for?
mostly like the first couple of deals we did and kind of found our niche in it, and a lot of people don't like it. Is to really look at a healthy mixture between tenant-owned homes and park-owned homes, and then turn those park-owned homes over. And some operators don't want to touch park-owned homes at all, and we like to take them on and then put some capital into them, just get them somewhat ready for a handyman special. Depends how bad they are, and send them off with rent-to-own contracts, so to speak, rent-to-own or lease with an option, so to speak. Basically get them off our books, and we did that successfully in other deals already, and then dramatically reduce the expense ratio and dramatically increase in the NOI and the value. So yeah, that's what we like to do. And some deals we have like heavy PUH, and we turn them all over to TUHs, so the majority that is. So we're not really shying away from rentals, and also we do a lot of infill now as well,
Hmm.
because as you accumulating more assets, and they all have a couple of lots here empty, and there's 10 empty over here and 10 there, and then you look at your overall portfolio and you realize, if I just infill all of those empty lots, it's like buying another park.
Yeah,
So
yeah.
so we start heavy infill right now, so that's a major value add across the portfolio, doing that. And then we love, like everybody else does, we love to buy anything that's super under market rents. We just snatched up a park, owner financed, from somebody that he actually co-developed and co-built it with his dad back in 1965, and he was
Wow.
basically he's the second owner after his parents, and got him through college, got the parents through retirement and all that stuff, and he basically sent it over to us. And market's like 475 lot rent, we took it over like 225 average rents, so wildly under market
Wow.
rents. The roads were not even existing, also like sand roads. It's like almost coastal South Carolina. It's Sumter, so it's a little bit, it's like an hour and a half, I think, from the coast roughly. So, but like this was just sand roads, and we just completely paved everything, digitized everything as well. So people were paying cash all the time. So we actually went in, did implement the property management software, and we still doing like the cash pay stuff as well. People go to the retailer and can pay cash that way, but it's much more systematized now. Before was like they always called the owner if they had an issue, and he was out there fixing stuff. You know how it is, mom and pop
You don't want to
operator.
go
So
do that,
no,
Matthias? You don't want to
man.
go out and do that?
With a with 1,000 units, man, I got a kid. So I have a plan for this crap. uh, no,
How
that's
long do you guys give them to start paying online? Do you do it immediately?
we send it out immediately. Like the day. So right now we're closing on deal next week. We just got them in the system today. So we do it before we actually close. We have already rent roll upload in our rent manager, and then once we actually go live and we close the deal, we literally go in and send them all the logins immediately in the cash pay numbers, and then we will see like the tech savvy one's going to jump on it right away. The proactive ones will figure it out, and there's always like a selective few. They're like, oh, I'm not good with technology. And then you have to kind of help him a little bit, and then you should give him like a 30-day grace period, and then we drop the hammer. And it's like we got to figure this out, man. So,
Yeah, yeah,
and
yeah.
then these in that one park I just mentioned that we took down, that was very mom and pop. Like we had some people that they could not get this figured out, and then our community manager, we had to actually do like an auto like ACH draft from their account,
Mm.
like set up and like have them sign it, and they were completely fine with it. So we kind of like auto draft all their accounts into ours. So they did not figure out the retail thing, and definitely not the online platform or nothing. So they have no email, zero. Very older demographic, obviously. So, but we usually give them 30 days to get that up to speed. That's our grace period. We take over, and go from there. So the next one we're gonna close now, they're used to rent managers, so there should not be a surprise. They just have to do the same thing they did before, just for our system. So that tenant base is kind of nurtured already in a sense. That will help a lot
Mm.
for the transition.
Yeah, yeah. What about you said community managers? Do you guys keep the community managers that you inherit?
We did it before. It was one of the mistakes in I think our third syndication. We took over the community manager, and I think the seller tried to kind of screw us over a little bit too. Like he made a little bit of a show when we were there, and like, oh, this is this person. She's a community manager. She's amazing. And like the week we took over, she was like, this place sucks, and the owner screwed me over, and I'm out. So, so we had to find a new one. And since then, we always picked our own if we could. So we always interview them actually very heavily during due diligence and see if that's somebody we want to take and keep. Really, we do.
But this is a tenant that you're talking about.
Correct. Yeah. This, like the other parks we have, that actually the community managers live closely, but they don't live in the park. They don't. They
I don't like
actually.
hiring managers that live in the park.
Yeah, yeah, I know. They all get buddy buddy, and then they're just gonna make exceptions. And yeah, I don't like
Yeah,
that at all. Yeah,
yeah. We
exactly right.
have a new policy now that we I don't care how fucking good that the old owner says that the old manager is. We It's company policy. We don't bring them on. We have our own manager. We do our own thing because there's just so many times that I like it's too many times to count where that's BS
Yeah,
because some of these, like a recent park we closed, this freaking this manager is so good. It was so good. The old owner said he was so good, right? But he's trying to run these little schemes in the park, was stealing from the old owner, and it's like, I'm done with it, dude. I am done with it. I don't care if you just, I don't care. Like if you've been doing this for 20 years and you've never had a late payment, I don't care. I don't care. You're gone.
yeah,
Like
yeah, yeah.
that's the stance we've taken here recently.
I don't blame you, man. I mean, it's always the same. I mean, the sellers want to sell this thing, and of course, they're going to sugarcoat everything. And especially if it's a distressed asset, it's probably distressed for a reason. And then if you're going in, you probably have to restructure everything anyway, including the manager. You got to, and especially when you drop the hammer on the tenant base and there's high delinquency and stuff. You need a new manager that doesn't live in that park that drops
Yep.
the hammer. I learned that lesson in like manufacturing when I was a manufacturing as chief operating officer. I mean, I could never, ever, and anybody in a management position could not be a friend or family member of somebody in the company because there will always be exceptions made because they know each other. Oh, and then the rumor mill starts. Oh, he just got hired because, they know this guy, and oh, he's favoring him because, they're neighbors, whatever. There's always something going on, and it just brings so much, turbulence into the relationship. Somebody brand new, everybody's just going to be like, oh, let's be careful. I'm not sure how this guy is. And then you
Yep.
have like a clean slate. That's the key, man. We do the same thing.
Yeah. Yeah. I think it's important, and I'm I'm just over it. If you can't tell.
Yeah,
Um.
totally. I can tell.
Yeah.
Tell me how you really feel.
So what about, like, what's your management like system and team look like? Do you keep, like, I think you're doing most of the management, correct? You're overseeing that.
Correct. Yes. So we have our own property management company. Tim and I. Actually, Tim founded this before we even got together, working together, because he had a couple parks before we started working together that he already managed. It's called WC Management Solutions. It's just like a vertically integrated property management company that serves our syndications at the moment. So basically, in that, we structure in such a way we collect 5% of gross, roughly, depending on the deal size, sometimes 3% that goes to the community managers. Depending on the deal, that's mainly because of the POH. If you have a lot of POH, you have a lot more rents coming in, so you can structure that way. Sometimes you just do hourly rates. Really depends on the deal. In the back office, that's us. That's a property management company. Gets also 5% of gross. That pays for the subscriptions and software and rent manager that we're using and stuff like that. And also all the VAs. So bookkeeper VA we have on there. We have a fractional CFO. We have three other VAs that one does only maintenance requests, one does only leasing, one does only collections, and everybody has a couple KPIs we're tracking every single day. So every day they send us end of day reports with their KPIs and how we're looking like and what they did, and they show the challenges and what they completed that day. Every single person sends that to us, and every morning they send us a recap of how the previous day closed on the collection side, leasing side, how many
Mm.
inquiries we had, how many showings we had, how many leases been signed. We get like an application to lease conversion rates, and all that stuff gets calculated. So it's very data driven, and we're actually going to supercharge this now as well. We just hired somebody that was actually working for Open Door Capital for a long time, and he's joining our team now, and he is implementing Power BI, where he's tapping into Rent Manager, and we pulling data live out of it, and we can kind of build a custom dashboard, and you can
Mm.
kind of click on any property we have on in our portfolio and just see everything in one view. Like, yeah, basically it's just like one spreadsheet in a sense. It puts on a spreadsheet, but you see like one picture, and then you can also do like the whole portfolio view, and you see delinquency, occupancy, and everything. The rent roll all view in one view, but the summary rent roll, that is. So and it can be customized in that sense as well. So he's also joined the team right now. He's going to be our lead asset management, because we get into a size where I have to disconnect myself and go from 15,000 feet view to 30,000 feet view, because we're
Yeah.
building this big empire, that I need somebody else that can be an operations lead, because I'm still the operations lead, but I'm going to be like the COO, so to speak, where we have then like a director of operations and operations lead, so to speak, that's going to take care of things there. So yeah, I think I've got everything covered there, what we do on the property management side. Of course, we have other people too that we have on the team that does like investor relations on the sidelines, nurturing the investors and the CRMs and the marketing and stuff like that as well. And Tim is the acquisitions master. He does all the acquisition side on that end, with talking to sellers, brokers, whoever that is. And I'm the analytical guy. We have an underwriter on the team too. She underwrites the deal 90%, so to speak, gets it all underwritten. I do the last 10% as a review, and then send it out to our VAs. They're going to draft an LOI. Tim is reviewing it. Boom. LOI gets sent out. So they have a really good system in place. Like, we built a powerhouse of a company in the last 2 years. We're really proud of it. Everything is like super efficient and streamlined. That's how we get a lot of volume done, a lot of work done
Mm.
in a timely fashion.
Yeah. 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 That's awesome, man. Cause that's like a key thing to get figured out, getting your team dialed in. And, luckily we've been able to do the same after, stumbling and making a ton of mistakes on the way in the beginning when I first started buying these things.
Yep,
We figured out how to get it and get it scaled pretty fast. So,
exactly.
um, awesome, dude. It's been great talking to you, man. Any last words that you want to say?
Yeah, the first deal should just get you in the door, and from there, just don't give up. To anybody in the audience, if you're on the fence, just do it. I mean, like the Nike commercial, just do it. Just go in, just do it, get it done. Partner with somebody perhaps that knows, maybe that he's already down the road or has been down the road a little bit. And then you just learn it from there. You just have to be tenacious and relentless and keep digging at it. And uh, yeah, the sky's the limit, man. If someone would have told me about 4 years ago when I bought my duplex and I'm gonna have 1,000 units 4 years later, I would have laughed in his face hard time. Big time. I wouldn't. I mean, I probably would have believed that I can amount to something big and great, but not in that short time frame. But it's
Mm.
possible, and I'm sure we could have even done more if we wouldn't have done certain mistakes. But I think the mistakes make you the person that you are today to even get bigger and bigger from there. So I think failure is a recipe of success or an ingredient of success. So don't let that discourage you.
Yeah, yeah, for sure. It's a great message, dude. And I'm definitely excited about what you guys are doing, man. And I mean, it's awesome. And it's just, I love like seeing other success because it's proof to me, like, okay, what can happen, right? Like there's people, doing it and like, I still want to grow and we're still growing, right? And
Yeah.
proof of success is like, I just think it's awesome to see. So you guys keep crushing it, man. Keep crushing it.
Thanks, bro. We appreciate you.
Yeah, absolutely. So, look, thank you, everyone, for watching the MHP show. We will be on next week. And again, look, if you're an investor looking to place capital before the end of the year, we're closing out this last tranche of Fund One. And you can go to victorycapital.com. It's VICKTORY capital.com and go to offerings and check that out. So we will see you all next week on the MHP show. Peace.